Well, and stewardship has a really important role to play in that. I started my career in the sustainable investing field about 14 years ago. I was working for a small ESG research and data provider. And at the time, the data available to us was primarily usable from an exclusionary perspective. We could identify which companies had significant controversies, which companies had had significant externalities on the communities they operate in or the environments in which they're exposed. And that information is interesting and meaningful. But what we couldn't get necessarily was good information on how companies were managing those risks or working to prevent those issues from happening going forward. And over that timeline, what we've seen is a significant amount of additional data coming out into the public sphere, which allows us to be more sophisticated in the investment process, really clearly codifying and identifying which issues are potentially material for a given sector. So for example, if we leverage the SASB standards, the Sustainable Accounting Standards Board, which articulates which issues are most potentially material on a sector and industry basis. But companies themselves have also published a significant amount of additional information, more forward-looking, more quantitative, assessing how they are identifying material ESG risks across their business, what the management and oversight of those risks is, and what their plans are to reduce those exposures over time. So for example, a company that has concerns related to employee health and safety could look ahead and identify how they intend to reduce lost time incidence rates or employee fatality rates, employee injuries, and concerns of that nature on a forward-looking basis. And that creates accountability. And stewardship has played a significant role in encouraging companies to be more transparent and to publish more forward-looking information. So while there's still quite a ways to go, the data landscape has evolved, but we're greedy. We always want more. So we're always looking for companies to publish in clear, consistent, comparable data. Certainly, we're in a space today where we can find and derive meaningful insights using the ESG data that's available in the marketplace.
There is one key thing I would encourage Asian investors to do before conversing with any ESG framework, and that is do your homework. Sustainable investment solutions have been more sophisticated, and product proliferation is also occurring in the market. Be sure to do your due diligence on ESG investment strategies and the asset manager you are considering. It is important that you understand the framework and have deeper understanding of the stewardship policy sitting behind the scenes, including engagement and policy voting activities. With over 130 billion of asset under management in sustainable strategies globally, and also with over 30 years of expertise constructing sustainable investment solutions for many of the world's most sophisticated investors, London Trust, we welcome the opportunity to help Asian investors looking to understand more about sustainable investment solutions and support them as they're planning in their own ESG investment journey.